As Angie mentioned, today I'm going to tell you about the process of buying a home in China. My presentation is going to be a little bit unusual because I'm not in the real estate business, so I promise I'm not going to try and sell you anything. But I will tell you about the opportunities and some of the risks of buying a home in China and the quirks that make owning a property in China a little bit different than owning one elsewhere. As Angie mentioned, I became a property owner in 2002 when I bought a floor in a Hong Kong office building. And since then, I bought, sold, and rented commercial, residential, and industrial property in Hong Kong and in Tokyo. And I've also undertaken a couple of fairly interesting renovations, like this one here, that became the multimedia studio. I bought these properties as an outsider with a lot of questions and with even more skepticism. And my books are written from that perspective, as is the presentation that follows. So let's start with the most fundamental question of all: can I buy a home in China? Despite the recent market tightening measures, foreigners can still own a home in China. But you need to have lived in China legally for 1 year before you can buy. Under Circular 171, which was promulgated in 2006, foreigners can only own one property, and it has to be for your own use. You can't rent it out. People from Hong Kong, Macau, and Taiwan are not considered to be foreigners under this regulation. And aside from properties near some government offices, there are no restrictions on the sort of property that you can buy. So, for example, you can buy something like a villa on a golf course, Andre. Under Circular 186, which was issued in 2010, foreign companies can also own property in China. But again, the property can only be for the company's own use. They can't rent it out. And it's possible to do like you do here in Hong Kong and use a company to buy, sell, and rent real estate in China. But frankly, it's such a bit of aggravation to do that most people don't find it worth the hassle because the company has got to be set up specifically for that purpose. Circular 171 and 186 are national regulations, and on top of those, there are city-based rules. For example, in Shanghai, you've got to produce tax receipts showing that you've lived in the city for 12 out of the past 24 months. And unmarried non-locals are prohibited from buying a home. In Beijing, you have to have paid local taxes and Social Security for 5 years before you can own. In addition to these restrictions on foreigners, there are also restrictions on locals. For example, there are limits on the number of properties that you can own. You have to make a larger down payment if you're buying a second home. And the interest rates on mortgages for second homes are higher. Beijing recently announced that single local people can only own one home. There are a million scams in China to get around these regulations because real estate is such an important part of the Chinese economy, including things like fake weddings and fake divorces. Marriage plays a central role in the process because the property ownership regulations are not based on the individual, they're based on the household unit. And marriage can be a way for a non-local person to get a residency permit or a hukou. Regulations change frequently, and right now we're in the midst of a tightening phase. But it wasn't always like this. Back in the 1990s, in Shanghai, if you bought a property, you could actually get a hukou in what was then a very depressed residential property market. So now let's look at China's land policy. With a few exceptions, all urban land in China is owned by the state, and all rural land is owned by collectives. Individuals and companies are not allowed to own land in China. When you buy a home in China, you're buying the building or a share in the building and the right to use the land under the structure. Land for residential use is leased from the state for a period of 70 years, and the first land lease was actually signed in Shenzhen in 1987. Since then, no land leases have expired. Now, the central government has gone on record and committed that residential leases will be renewed when they do expire, but they have not explained the process for renewing those leases. They haven't explained how long the leases will be renewed for, and they haven't explained how much it's going to cost to renew them. Land for industrial use is leased for 50 years, while land for commercial use is leased for 40 years. Unlike residential land, commercial and industrial land is not covered by the automatic lease provisions that I mentioned a minute ago. Also, improvements to industrial or commercial land revert back to the state at the end of the lease. So if you put up a building, it actually goes back to the government when the lease is over. This is important because you will see individual apartments in Soho offices and also rooms in hotels marketed as investments, and these might appear to be residential, but in fact they're commercial and they're covered under the commercial regulations. In China, land is developed in two ways. The first is expropriation, which is also known as eminent domain, compulsory purchase, or if you're from Australia, resumption. And under expropriation, the state takes a home, compensates the owner, clears the land, and then leases the land to a developer. Sometimes homeowners are happy with this arrangement because they're resettled in new apartments with modern conveniences like indoor plumbing. But some people protest or refuse to leave their homes. Old low-density properties near the city center are often expropriated and replaced with profitable, high-density apartment buildings. And that's one of the reasons that many Chinese buyers prefer to buy new homes. They're less likely to be expropriated. The second method occurs when a collective converts farmland to urban use. And when this happens, the farmer sells his land use rights to the collective, which in turn sells them on to a developer. Individual farmers can't sell their land to developers, and the farmers only receive a small fraction of the proceeds of the sale, and sometimes that leads to social unrest. Usually, this process works pretty well, but not always. For example, there are no less than 79 residential complexes on the outskirts of Beijing that are built on rural land, and homes in these complexes sell at a discount because they have impaired land use rights. The conversion from rural to urban land has created a uniquely Chinese development called the urban village. Now, as cities grew, they absorbed neighboring villages, which were classified as rural land. The villages had two parts. There was farmland and fields, and there was also houses and other buildings. The cities bought the farmland and converted that into urban land, but in many cases, they didn't buy the buildings. And those buildings and the land that was underneath them became urban villages, which are little oases of rural land owned by collectives, and they are still governed by rural regulations. Urban villages are especially common in southern China. In 2005, there were more than 300 in Shenzhen alone. Guangzhou has over 130, including Shanghai, which is shown here. The residents of urban villages make a tidy living renting rooms to migrant workers, and in some villages, the ratio of migrants to locals is 30-1. You don't want to live near an urban village because they're fire traps, they're hotbeds of crime ranging from prostitution to drug dealing and burglary. And the security camera that you can see here and the iron grates over the windows and the balconies are not at all unusual. Urban villages are very commonly in the center of the city, and Shanghai is about a kilometer from one of Guangzhou's most prestigious and expensive shopping centers that you can see here. So now let's look at China's housing stock, and that can be broadly divided into three categories. The first group is homes that were built before the revolution in 1949, and in Beijing this includes siheyuan or courtyard homes. In Guangzhou, you've got qilou shop houses, which are notable for their covered shopping arcades that protect you from the sun and the rain in Guangzhou. Guangzhou also has xiguan houses like this one and western villas, particularly in places like Shanghai Island. Shanghai has Lilong townhouses and some of the world's best Art Deco buildings, like Broadway Mansions Hotel near the Bund. Shenzhen, on the other hand, saw its population jump from 30,000 in 1979 to about 13 million last year. So as a result, there's very, very little in the way of old housing stock in Shenzhen. Pre-1949 homes can be spectacular, but renovating them is not for the faint of heart. The ownership structure can be complex because properties were often subdivided to accommodate multiple families, and it can be really difficult to find and negotiate a settlement with all of the people who have a claim on the land use rights. Renovations also can be very expensive. It can cost you upwards of 70,000 yuan per square meter. And deferred maintenance means that some of these places are in pretty grim condition. Also, many of the siheyuan, for example, don't have indoor plumbing, so if you want to go to the bathroom in the middle of the night, you've got to put your shoes on and walk down the block. Old homes like these Lilong in Shanghai also tend to be near the city center, which makes them expensive and also prone to expropriation. The second category is homes built between 1949 and the end of the century. Unfortunately, most of these homes are simply not worth considering. After the revolution, the government's main concern was to house people quickly and inexpensively. Comfort and style were low priorities, and homes tended to be small, ugly, and poorly built. In addition, it's almost impossible to get a mortgage for a home that's more than 15 years old. The final group is homes erected after 2000, and the amenities, designs, and construction of these homes can be superb, especially in developments by top-tier builders. However, quality can still be an issue. You may have seen last month that builders in Shenzhen were discovering using untreated sea salt in the cement that they were using, and that causes major problems down the road because the chlorine and the salt in the sea sand actually rusts the rebar in the building and can lead to structural failure. New homes and other developments are sometimes built in old industrial zones, which are known as brownfield sites. And many of these are popular as development sites because they have city center locations. Shanghai's M50, for example, was once a collection of warehouses and factories, and the Expo 2010 site was also formerly the home of a shipyard, a power plant, and a steel company. Brownfield sites are often contaminated with petrochemicals, heavy metals, and persistent organic pollutants, and this has caused major problems throughout China. For example, a 2,400-unit Yangtze Pearl apartment complex in Wuhan was discovered to have been built on a contaminated site where a pharmaceutical plant had operated. This doesn't affect every new build in China, but it's certainly something that you might want to keep in mind. Now let's take a look at the process of actually buying a home. It's always a good idea to start with online research to learn what's available, the pricing, and generally how the market works. The more background and the more information you have before you put your boots on and start walking, the more likely you are to be successful. When you've identified a potential home, investigate the neighborhoods and things like road noise. And look into the building and developer. You wouldn't want to live next door to a graveyard or in a building that was the site of a murder or a suicide. Another famous example of a place you wouldn't want to live next to is Lotus Riverside in Shanghai, which fell over in 2009 because it had been built with hollow pilings. It's since been renamed, by the way. I'm a big believer in scouting neighborhoods on foot because it's a great way to discover opportunities, problems, and the location of the nearest card game. When you've found an area you like, visit at different times of the day and on weekends to ensure that you get a full picture of your new neighborhood, because neighborhoods do change depending on the time of day and the day of the week. You might even try commuting to your new office to see if that works. Also, China's infrastructure is being built out at a frantic rate, so you should check your neighborhood to make sure that it's not going to be the site of a new train line or other major development. Very often you can't do anything about these developments, but you should factor them into your buying decision at the very least. If possible, find a real estate agent who's used to working with expats. It'll make communications easier, and it'll also increase the likelihood that you find a place that suits you. A classic example is kitchens tend to be enclosed both here in Hong Kong and in China because servants work in kitchens, whereas Westerners, we like to entertain in them. So it's those sorts of things that if you can save yourself the trouble of explaining it to a real estate agent, you'll make your life easier. If you do buy a home, the sale and purchase agreement will almost certainly be in Chinese. Chinese courts will enforce a contract that's not in Chinese, but most local vendors won't sign one. And Chinese contracts take precedence over foreign language ones unless the Chinese contract specifically and explicitly states that the foreign language version takes precedence. You should expect to pay at least 30% of the purchase price as a down payment, and there's no escrow in China, so it's not unusual to hand over a brick of 100 yuan notes to the owner or to a real estate agent acting on your behalf. And while some cities have computerized land registry systems, a national registry doesn't exist yet. One is planned, though, as a precursor for the national property tax that's expected to be put in place by June 2014. Speaking of taxes, you'll pay a deed tax of 3% to 5% of the property's value, and deed taxes are lower for smaller, less expensive homes, which are called ordinary homes, which are built for workers. You'll also pay the real estate agent's commission, which ranges from 0.5% to 3%, with the actual price depending on the value of the home, its location, and your negotiating skills. If you're not a Chinese national, you'll need to pay to have your signature notarized, and that costs 0.25% of the property's price. It's not at all unusual to have the vendor make the buyer pay commissions and taxes or to bury them in the asking price. In Shanghai and Chongqing, you will pay an annual property taxes, and there is a range of other taxes and surcharge, but these are relatively minor. They're not big ticket items. When you sell your home, you'll pay a 5% tax on the appreciation of the property, and this is waived if you've owned the property for more than 5 years. Last month, the central government announced that it would begin enforcing an existing 20% tax on capital gains from the sale of second homes. If the purchase price of your home is not known, you can opt to pay a 1% tax on the total sale proceeds instead of the 20% capital gains tax. If you buy a new home from a developer, you don't have to pay commission to the real estate agent. And that's one of the attractions of buying a new home. Another is that the developer should have resolved any outstanding title issues. You'll get the full 70-year land lease, and new homes generally have fewer problems with building quality. Your new home will probably be handed over to you as a bare shell, and some developers offer decoration services, but this is by no means universal. Many buyers like bare shells because they're cheaper to buy, they deteriorate less if the home is being left empty as an investment, and they're easier to sell. But as you can see from this bathroom, bare shells are very bare indeed. And finding a contractor who can meet your schedule, budget, and quality expectations, and managing the decoration process is a challenge in any market, and China is by no means an exception in this regard. Whether you buy new or used, mortgages are available from local, Hong Kong, and international lenders. China's mortgage market is heavily regulated, and yuan-denominated loans are effectively commodity items with lending rates and regulations set by the People's Bank of China. International and Hong Kong banks have an edge in terms of customer service and their ability to offer foreign currency loans. Typically, they also offer literature and information in English, which you may find harder to obtain from a Chinese bank. The foreign currency loans can also be attractive if you believe that the yuan is going to continue to appreciate. Developers generally don't offer financing, but they usually have a relationship with a bank that's financing the construction process, and that can sometimes speed up the application process, but you won't get a better deal on the mortgage. And while mortgages are available, a surprising number of homes are still purchased with bricks of 100 yuan notes. Research by CLSA showed that in 2011, 1/3 of all buyers paid cash for their homes, up from 24% in 2007. For investment properties like this apartment, 53% paid cash in 2011. And that brings me to the final part of my presentation, and arguably the most critical question of all: is there a bubble? And I think the question is a qualified yes. Prime real estate in China's Tier 1 cities, Beijing, Guangzhou, Shanghai, and Shenzhen, is undoubtedly expensive. And despite the central government's market cooling measures, prices continue to rise. In March 2013, prices in 100 major cities increased by 3.9% year on year. Homes in prime locations are now equal to, and in some cases more expensive than those in New York, Hong Kong, or London. Prices have risen with China's growing wealth, but they're also driven by a lack of alternatives. Low interest rates, lack of access to international markets, and other factors make cash, stocks, and bonds relatively unattractive to domestic investors. Real estate often wins by default, even if properties are left unoccupied and decaying, like this villa. While property prices are high, I don't think we're going to see an American subprime-style crash. That's because loan-to-valuation ratios remain low, and there's very strong demand from upgraders. Research by the Brookings Institution shows that nearly 1/3 of China's 225 million urban homes do not have a private kitchen or a private bathroom. And the State Council recently predicted that by 2030, nearly 2/3 of China's population will live in cities, up from about 50% today. That's 300 million more than in 2012, roughly the population of the United States. Furthermore, China's new leadership is committed to socialism with Chinese characteristics, making it highly unlikely that we're going to see a return to the day when housing was provided by the Danwei or work unit. If you're planning on living in China, buying a home can make sense, but only if you're going to be in China for the medium to long term, if your personal and financial situations are relatively stable, and you're aware of the risks. I wouldn't expect the dramatic price gains that we've seen over the past decade, and I would prepare for volatility, whether that's from policy and regulatory changes, a global recession, a geopolitical event, or a black swan. And now I'll answer your questions. Thank you.